Hi, good evening, ladies and gentlemen. I'm Ahmed Tareef. I'm delighted to welcome you to the Tareef Family Virtual Majilis this evening in our fourth Majilis concerning ESG, environmental, social, and governance. We will be explaining sustainability reporting. I am very pleased to welcome Ms. Geetha and our host, Ms. Zoe Beckingham. Thank you for attending, and I would like to hand over Ms. Beckingham, who will chair our discussion. Thank you, Ms. Zoe. The mic is yours.
Thank you, Mr. Ahmed.
Thank you.
Good evening, everyone. Welcome to the Tareef Family Majilis. I'm Zoe Buckingham, your host. Mr. Tareef, it's an honor to host this Majilis on behalf of your family. And I am delighted to introduce Geetha Rubasundram. Geetha is Director of Governance and Sustainability with Advicecube Consultancy in Bahrain. She's also a member of the Board of Directors and Scientific Commission of the International Society of Criminology. A chartered accountant and chartered management accountant, she has 21 years of international corporate experience covering a multitude of different industries that you can see on the screen. Geetha, welcome. It's lovely to have you here.
Thank you very much, and I'm very happy to be here. And I must reiterate this thing that, it's a wonderful platform, and I'm really looking forward to today's session.
Thank you so much, Geetha. And just a little word about me. I'm Zoe Buckingham. I'm your host. I'm an expert in international marketing in the finance and digital sectors. I love learning about new ideas, and I've enjoyed our other ESG Majilis, which we have put on recently. So it's incredibly exciting to be here and to introduce our topic this evening. Of course, it's sustainable development and sustainable reporting. So over to you, Geetha.
Thank you very much. Could you go into the definition, Zoe? Thank you. All right. Good evening, everyone. And the first thing that I would like to start off about is, forgive me if today I sound very pessimistic or negative. That is not the aim of this session. The whole session is about the practicality of actually implementing sustainable reporting, and as well as focusing in terms of how can corporates as well as individuals make a difference. So over here, I've actually taken a definition of sustainable development from the Brundtland Commission in 1987. It simply says that basically sustainable development is a development that meets the needs of the present without compromising the ability of future generations to meet their own needs. So this has been there for many years. There's been a lot of information that has been discussed over the years in terms of sustainable development initiatives that have been put across internationally. But it's at this point of time when we are facing crucial climate issues and many other social related issues that we are actually, critically looking at it from an angle whereby everybody needs to be on the same ball game. Next slide, please, Joey. Can I go into the definition as well? So likewise, in this case, I've taken a definition of corporate governance. Likewise, this also touches on building an inclusive society. And how that is supposed to be achieved comes back towards building an environment of trust, transparency, and accountability. But not forgetting that we are also looking at it from the angle of financial inclusivity. And that is why it aims to foster long-term investment, financial stability, as well as business integrity. We need to also understand that the OECD efforts has been there for many, many years. And the one thing that I would also like all of you all to remember as we go through the session today is this. Prior to 1996, a lot of countries, including the developed countries, actually accepted a lot of bribery and corruption related expenses, and it was actually written off as business expenses and they were tax claimable. It was only after the 1996 initiatives by most of the institutions worldwide that, due to pressure, we started changing our culture and our mindset in terms of what we would accept. Next slide, please. So if we have had all these years of experience and knowledge and brainstorming, why has it not worked? I mean, if we just look at those two simple definitions, let's put aside every other framework that we have looked at. It seems to be quite clear cut, isn't it? In the sense that we should be all doing what is right. But it has clearly not worked. And one of the top reasons, can we go to the first bullet point, comes back towards leadership and culture. Now, when I talk about culture here, it's not just about culture from a company point of view. It also comes back towards culture in terms of on a country level or a regional level, and what's acceptable and what's not acceptable. Even in this day and time where we talk about many different types of abuse of power, there's a lot of countries that still accept it, and you can't go against it. Let's face, certain realities that when we talk about sustainability, we need to talk about sensitive issues. We need to question a lot of things. But how many countries or how many companies would actually allow that? One of the things that I'll also be touching about in the later part of this session comes back towards different cultures, different issues, different approaches. And that is something we need to look at in terms of leadership and culture. Today, when we look at leadership, whether it's on the boards or whether it's for the top management, with a lot of countries, whether it's developed or developing or least developing, if you were to go against the top management, chances are you're going to be the next one out. We can have whistleblowing laws, we can have corporate governance in many different ways, whereby we want to encourage free speaking. But when the truth hits the fan, normally it's the whistleblower that is going to be victimized, not anyone else. Next point, please. And this comes back towards the mindset of most companies that as long as we are compliant, we are good to go. So regardless of whether this is genuinely being implemented, as long as there's no issues in terms of regulatory frameworks, they deem it to be fantastic. And this is something that you see again across the board. The one thing that I believe I should have started off with by saying is this. I think we also need to remove this mindset that, when we are looking at developed countries, that they have better governance than a lot of developing or least developing countries. Reason being is this: if we actually look at some of the indexes, or if we look at some of the data that is being collected, or the subjectivity behind all these indexes, you will find that it's very biased towards, I would say, a more Western-based concept of governance. And that becomes a major issue, because likewise, like what we had discussed earlier in terms of family-based businesses, it does not mean that family-based businesses are going to be any less governed. And that is something that I'll also be touching on, because that is something we need to look at, which is going to be special to each country and each company. Next point, please. And this then comes back to the next point of short-termism. Today, when we look at governance codes, especially if we follow those that are Western-based, there's a lot of focus in terms of relating performance-related indicators to remuneration. But having said that, there are many countries who are equally as successful, I would say, or growing, and they do not have that same reporting mechanism or the same reporting requirements, and yet they are sustainable. This is where we also need to acknowledge that, are we putting too much pressure in terms of our C-class suites? Meaning in the sense that because they need to actually deliver, they are going to be willing to actually maybe misrepresent the reports, whether it's on their financial or non-financial data. We are still, although there's an urgency, we need to also understand that there's going to be a lack of assurance, for the time being. Of course, the disclaimer in most of the annual reports whereby we talk about future related, data and the protection that we are giving to the management to a certain extent due to the subjectivity as well as the volatility of the environment. I mean, well, it's practical, it's required, but it's also an excuse at the end of the day. Next point, please. And this comes back towards a conclusion, not a conclusion, but basically a summary of the earlier points. This is where we need to question the move from our black and white mentality towards that gray, that subjective area. I mean, when we were all growing up and when our parents were teaching us about values and our religions, it was clear cut, right? Lying is wrong, stealing is wrong. But when we, somehow or another, as we entered the corporate world, somehow or another that got a bit vague in terms of what do we consider right, what do we consider wrong. And of course, it's like, especially when you sit in many meetings, it's like they tell you be practical. And if you're not going to be someone who's going to work together with the board or the management, as I said, you're the next one out. Next point. And this comes back towards the mindset of businesses. It's simple. If we look at a lot of research that has been done in terms of the GCC as well as internationally, and when we actually look at one of the main reasons on why these companies have actually embarked on the ESG or sustainability journey, it's a very simple story. It comes back towards branding. It comes back towards their access to resources, access to finance, in terms of being able to pick up better employees, and because it's just expected of them. Of course, governments are also playing a huge role in terms of pushing forward as the ESG sustainability, mindset in terms of a lot of listing requirements. But is that truly enough? And this is where we can say that companies, regardless of how big or how small or which industry they come from, can all still play a role, even non-profit organizations. Next one. So we've talked about, I'm sure that even with your previous sessions in terms of ESGs, you all have gone through the various frameworks, the various regulations and guidelines that are there. It's overwhelming for a lot of people, not just about companies that have some sort of a developed framework or a developed reporting mechanism. Even for them, it's going to be very difficult. And one of the latest, I would say, development in terms of standards is the release of the exposure draft for the IFRS S1 and S2. Zoe, can we have the images up, please? Thank you for both. Yeah. So coming back towards this, it's like the first two that had actually been released for feedback was the IFRS S1, and this comes back towards the general requirements for sustainability related financial information, and the IFRS S2 climate-related disclosures. These were deemed to be the most important ones, and later on there will be more discussions in terms of what are the new standards that are going to come back to. And this is where I would say that this is very entertaining to me, for me, especially being from the accounting line. For one reason, I'll be frank with you in the sense that, like, when we do sessions with companies in terms of pushing them towards, identifying their roles and their vision in terms of sustainability or ESG, or even integrated reporting, which I will introduce in a short bit, there's a lot of issues because people and individuals within the company still continuously think in silo. And that's a major issue because there's no connectivity within the information. And later on, when you actually want to verify and provide assurance and to be able to show this in your reports, it becomes a major issue. And because of, ever since this exposure draft has actually come out, they are expecting to actually conclude and probably put it out by the end of this year or possibly by the beginning of next year. I've actually seen more accountants or more people from the accounting background coming in because this comes back towards your financial disclosures, the financial information that you need to look at. And they're getting worried because they're like, okay, how do we ask the right questions? How do we ensure that the values are going to be there? How do we then apply the accounting standards to this? And there's a lot of questions. The one of the reasons for failure, as like what I was discussing just now, it comes back towards that leadership, that culture of the company. Do they sit down? Do they discuss together? And most of the time, no. You will have someone from corporate comp probably heading the whole thing. And corporate com would probably be very, they are looking at presentation, they are looking at branding, they are looking at indexes, and they are looking at achievements without looking at the reporting quality. And that is what we need to be looking at this point of time. This is how we need to start preparing companies to actually take it on. Next slide, please. Could we then get into the image as well, Joey? So this is just an extract that I've taken from the beginning part of the IFRS S1 exposure draft. And as you can see in the first paragraph over there, it talks about disclosing information towards significant sustainability related risks and opportunities, and coming back towards assessing enterprise values so that we can actually take a look at resources and also at the same time be able to pick up in terms of risk. Now, having said that, we need to understand that this is where, if you look at point number 3, it says that it should include a complete, neutral, and accurate depiction of its sustainability-related financial information. And with a lot of companies, this is where the gap starts. I'll give you an example. Let's talk about any of the energy companies in the manner on how they actually recognize their assets, their asset values, their returns, expected returns, the useful lives. At times, it could be vague. That's the best that they can actually do. So how do you actually provide all these type of assurance at the end of the day? How do you then gauge what exactly are the initiatives that you're putting in? How do you measure it, and are those metrics sufficient? Now, say for example, a lot of countries or even regulatory frameworks tend to follow, depending on the scope, the TCFD or the GRI or things like that. Yes, it's good to have that as a guideline. But then the next question that I will always ask companies is this: are you able to take on all of this? Are these really, does this really depict your culture, your vision, your mission, and is this where you want to be? And they can't even answer that. So let alone linking the whole story at the end of the day towards the financial information is going to cause a lot of issues, cost, as well as obligations on companies, as well as their boards and management. Next slide, please. We can go into the points. So when we actually look at this IFRS, the EDs that have actually come out, so they've actually, to a large extent, followed the recommendations from what you actually would see inside the TCFD. And luckily, I mean, in the sense that this obviously comes back towards the main ideologies that forms, I would say, the running of a company, as well as in terms of for most of the framework. So it's actually you're actually starting to see a convergence of all this in terms of making it easier for companies to actually focus on this. But one of the things that we need to look at is going to be in the sense that with these 4 boxes that you can see over here, what's new? Absolutely nothing. These are things that should have been there in the first place, regardless of whether we're talking about a climate disclosure, sustainability, or even if we're just talking about an overall economic performance of the company. And this is where companies tend to have an issue. I'll tell you, I mean, in the sense that I'm sure all of us are well versed in terms of, reading through annual reports or the audited reports or the financial statements at the end of the day. What do you see? Numbers, more numbers, words, a lot of words, and then after a while you go like, what was I reading? And you get lost because a lot of it is boilerplate as well. And that is one issue, because you have generic themes, you have a lot of words, because a lot of companies and countries believe that the more pages you have towards your reports, the better it is. But actually that is not really the case. If you have implemented these 4 core considerations in a very strong manner, you would be able to actually put across your data and information in a very concise manner that within a couple of pages, people would actually be able to pick up what you're doing, what is your focus area, and how do we measure it, and how do we compare it over the years. And it's done in such a way that it's so attractive at the end of, that people want to read more about your reports at the end. Likewise, in the sense that I'm also doing research as well in terms of my PhD, and this is my PhD area. And I'll tell you, it's like the focus is, of course, on integrated reporting, as I said, which I will be introducing in a short bit. And the one thing that I've actually, when I was going through these reports, was the vast disparity in the types of data of these companies that have actually gone through integrated reporting. But do you know, there was only about, I would say, two things that really stood out in terms of the governance mechanisms, and another two things that actually stood out in terms of performance of companies, both from the financial as well as non-financial point of view. So coming back towards what stood out was simply this: companies were starting to have greater emphasis in terms of their risk committees and their risk information, as well as in terms of diversity, especially when it came towards women, the inclusion of women on their boards. And in terms of performances, the two metrics that actually stood out for most of the companies was coming back towards employee turnover, managing their employee turnover, that means, as well as the number of women employees. And this was across 15 countries. And I will explain the mechanism behind it later to give you an idea in terms of the diversity that's actually involved there. But having said that, does that mean that having more women on boards is going to solve our problems in terms of both governance as well as sustainability? The answer is unfortunately no. Why? Number one, the first question that I would always ask is this: are you putting that particular woman in your board because it's a requirement? Is that female candidate really what you call this, deserving of that particular role? What is the power that that female candidate, what power would she actually have going across an entire board of male dominated networks? And I mean, again, I'm not being discriminatory. I'm a female as well, and I would love to see more women on board. Don't get me wrong. But today we need to ask the right questions. Do these women have a right to open their mouths? And we need to also understand that in a lot of good boards, people don't want to lose their position as part of being the board of directors. But does that come in exchange of silence? And then I'm going to twist this on a slightly different level, whereby I also do fraud investigations and, well, yeah. So as we go along, fraud comes back towards a very simple mindset: opportunities and ability. And what I've actually found over the years, in terms of both research as well as in terms of cases, is this: when women are given the opportunity to grow and they have the same level of opportunities as men, the same level of power, they too can make those decisions in terms of whether they are going to carry out misrepresentations or fraud. And likewise, a lot of women are today taking on, I would say, education in terms of forensic accounting, investigations, and things like that. And they acknowledge that the knowledge that they are gaining from these courses would also help them to cover up the fraud. And this comes back towards that whole mindset of what exactly are we trying to achieve today? Simple reason. Today, when we talk about governance and we talk about sustainability, we talk about accountability, we talk about transparency, let's even focus on in terms of one of the most regulated industry in the world, the financial institutions. Aren't we still seeing a lot of cases? Aren't a lot of the international big banks being investigated for money laundering issues, as well as regulatory issues? I mean, I've done investigations in a bank before, and some of the documentations that we see inside there, my goodness me gracious, you wouldn't believe that they are one of the most highly regulated, industries. So that comes back towards, then why do people do it? Simple reason. Today, most of the time, you get away with it with a simple penalty. No one's being sent to jail. No one is being penalized in any different way. And likewise, this is where it comes back towards our shareholders. And take most of the cases of where there's fraud. Initially, when the allegations come out, the share prices drop. Once it's cleared, once it's been settled, share prices go up again. What does that say about our shareholders? Whether they are institutional investors or whatever, but it says a lot about our focus on profitability first. And that is where the further expansion goes. Joey, could you please add on the other boxes? Thank you. And this is where we need to get it right. We need to make sure that it's something that is truly genuine within the organization itself. So this is where if we actually go around the box in terms of a clockwise mechanism, this is where we need to look at it in terms of how connected is all this information. If by right it's truly genuine, firstly, any one of our employees who look through the reports would say, yeah, that's my company. I see the culture of my company there. I see the sustainability efforts in that company. And we are able to pick it up. But most of the time, there's an issue in terms of what? Number one, being able to even assess what is it that we want to achieve. In a lot of companies, and this is where we are sitting with the C-suite, and when we ask them about vision and mission, it's quite funny sometimes to actually hear the silence that comes after that question. Because they were like, hold on, we need to check that. It's not something that they have readily because it's not being incorporated. Similarly, in the sense that a lot of them go by the mindset of, okay, we need to just put out bushfires. There's no proper planning. Why? Because there's a lack of data, there's a lack of information, there's a lack of timing, there's a lot of board commitment. And this is where we need to, in terms of getting it all together, in terms of the business model, we need to make sure that the people, process, technology, data all comes together. And when we actually start doing that, this is where we'll be able to look at the resources that's available. How do we actually put it into our strategy, which is going to be over the short, medium, and long term, as well as making sure that we are already picking up the metrics and whatever indicators that we want to put in terms of both financial and non-financial. And, having said that, as I said, now the link comes back towards it has to be strongly reflected inside your financial statements. So all that needs to come in. There needs to be a mindset in terms of the whole company, the whole organization needs to sit together, identify these crucial issues and deal with it. Next slide, please. You can go into the, yeah. So this is where we need to look at in terms of materiality. Now, of course, when we talk about materiality, again, you've got the single materiality and now you've got double materiality and God alone knows how many other material things that's going to come out. But today, we need to look at it from the angle of the company. We need to acknowledge who are we focusing on. Are we just looking at shareholders? Are we looking at stakeholders? If stakeholders, which one of the groups? And which ones are we going to be ignoring for the time being? Acknowledge that, which a lot of companies may not necessarily want to do. And that is where there's a huge difference. I mean, let's face the facts, like we have ESG, we have sustainability, and then we have got all these other reports and other angles coming in. They all come back to the same story, right? They all come back towards the same ideology that we just want to make this a healthier and better world for each of us. That's about it. But having said that, there's many different ways and there's many different things on how we need to actually mitigate these circumstances. Next slide, please. And this is where, Joey can go into the, yeah. And this is where we need to start setting up things within the company itself. The first thing is, as I said, establish that foundation. You need to get everybody on board. And if you don't have a management buy-in, this becomes a major issue. Your board buy-in, the tone at the top and the tone from the top needs to be consistent. You cannot have a separate rule for your board and your management and a separate rule for your employees. Next. And then from there, we need to start looking at many things in the sense that once you start identifying this, now the initial part gets a bit clumsy. You have a lot of people coming into the room, giving their ideas, wanting to be heard, and sometimes it obviously can be very conflicting. But once you reach a certain level of understanding, then the next thing would come back towards what are the tools that you need to look at. And this is where, again, you need to re-look at your entire organization. Next box. It can come back in terms of whether it's your technology, whether it's your people, the type of people you want to hire, whether say for example, your ERP system is sufficient. Do you need to get apps? How are you going to pick up this information? Where is the data going to come from? And it depends. Like say, for example, if you're running a solar energy farm, or if just say, for example, you're running a construction industry, there's many different things in terms of how you can pick up that information. Today, when you do audit, a lot of companies are also using drones for auditing in terms of the mining industry, say, for example. How do we then assure the information that comes from there? And then it comes back towards the mindset of what are we going to disclose? Again, we need to move this mindset of that, oh, we just need to disclose the good things. That doesn't work. I'll be frank with you. There is this particular oil and gas company in Russia, and when they started on the integrated reporting journey, this must be about easily 4 to 5 years ago. The one thing that I was really pleasantly surprised to see inside their integrated report was that they had actually established a whistleblowing hotline for the procurement side, and they had reported more than 20,000 cases in that 1 year. And they actually had provided information in terms of how were those cases managed and things like that. And they were taking a very strong point in terms of pushing forward the transparency and accountability agenda on behalf of the government. So companies can also, push forward a lot of agendas by themselves. Next slide. And so from there, once you've already decided to a certain extent what is it that you want to be looking at, or what is it that you want to disclose, understand the different standards. Understand what is it that you want to follow. Use it as a guideline, but you don't need to ensure that you've got it 100%. There needs to be a justification of what you're going to be looking at and what you're not going to be looking at. Next one, please. Assess your readiness. This is where a lot of companies panic, because in the sense that they don't want to tell people that they don't have the platform. Again, we need to move that mindset of that just because we're going to disclose something which is not so positive, it does not mean that it's going to impact our bottom lines. It does not mean that it's going to impact our share prices. There's many things that we need to look at. Next box. Develop your disclosures in line with your matrices and things like that. Next box. And then from there, continuous improvement. This is one thing that a lot of companies tend to make a mistake, in the sense that once they actually have something which they are pleasantly, satisfied with, they don't really look at whether it's actually something that can be developed further. This is a major mistake. Having said that, it's like the one thing that I think I need to also point out in terms of all these things, I keep talking about technology and tools. The other thing that I will also think that is very relevant, and sometimes I don't see that in a lot of countries and a lot of companies, is that the more that we are relying on technology, automation, and anything to do with IT, the more we need to ensure cybersecurity is thrown inside our governance codes. Next slide. You can click the links and let them out. So this is where I'm going to be talking to you about the integrated reporting framework and why is it relevant? Why does it provide that overall link at the end of the day towards whatever that we have discussed so far? So the integrated reporting framework has been there for many, many years, and it's actually something that I've really liked over the years because, I'll be frank, it provided the value creation process. And being a number cruncher many years back, that was the first question I asked. I was like, as an accountant, as a person who's signing off on accounts, I'm not happy with this. I think there's more to reporting than just numbers and just profitability. And especially in terms of investing, I would prefer to invest for the future. Next slide. Sorry, next box. So right now, the integrated reporting framework has, consolidated with quite a number of other organizations in terms of the Value Reporting Foundation, and like what you had seen just now with the IASB as well as the International Standards. Sorry, Joey, the next box, please. So in terms of the ISB as well. And so now you're seeing a lot of consolidations in terms of the sustainability reporting, I would say, perspectives. Having said that, even when you look at governance codes internationally, you're seeing a lot of convergence in terms of, where we would have seen a huge diversity, like say, for example, comparing the German-Japan frameworks versus, say, for example, the UK-US frameworks. But you're seeing more convergence as well. And that is something, as I said, can work both ways, which I will come back to towards in my conclusion. Next slide. You could go into the graph, sorry, the image. All right, so if we go into the integrated reporting framework itself, you can see that it's a cyclical process. On both the left-hand side and the right-hand side, you can see that there are 6 different capitals. This is different from your share capital, but in the sense that it takes into account what are the financial capitals, the manufactured, intellectual, human capital, social and relationship, as well as the natural capitals. How does this 6 capitals go through the business model as inputs into the company, come out through the business activities and becomes outputs and outcomes. And you can see that it's an ongoing cycle. So it takes into account both the double materiality concept already from before. And as you can see, it's basically linked towards the mission and vision, governance, strategy and resource allocation, performance, outlook, and of course, risk and opportunities as well. And it clearly identifies that when we talk about the value creation, it's not just about as in creating value, but also at the same time, are we looking at it from the angle of preservation or whether it's being diminished over time? So it's being very, very practical. And this integrated reporting value creation model is very strongly linked towards the sustainable development goals as well. Joey, the next slide. And if you actually go into the frameworks and the regulations that have actually followed it, you can see that most of them have actually linked this all up together. And it's very, it gives a very simplistic idea, but to actually get to this stage of being able to integrate the whole story together, it requires a lot of brainstorming. And what I said, an integrated journey by the company itself, where it's no more in silo. Next slide. Now, this is a screenshot that I've taken from Sanford. Sanford is basically a New Zealand-based fishing company. And this is their value creation model. So if you actually take a look at these 2 pages itself, you can basically see the inputs, all the different capitals, their business. You can see their values right at the bottom. You can see what exactly have they actually come up with in terms of their outputs. And then from there, you can see the SDGs being actually linked towards the outcomes. Here, when you talk about outcomes, it's actually the movement between your 6 capitals when it's an input to an output, the differences between them. So in a nutshell, when you actually look at these kind of infographics, it gives you a whole idea about the company. And if you go to the next slide, you will automatically see in the next 2 pages, they link it towards whatever performances or matrices, giving both the highs and the lows and what is it they've achieved and what they've not achieved. Again, I mean, it's not for y'all to, the session today is not just about for y'all to pick up in terms of, how do you actually implement it to your perspective. It's just for you to build that mindset in terms of how the connectivity goes. Do understand that there's 2 perspectives here. One is the quality of the data and the information that's been disclosed. And secondly, the presentation. So both play a very important role to provide that connectivity. Next slide. So looking at it, it's like, these are some of the questions that you're actually going to be looking at. How does sustainability fit in with the overall organization's purpose and strategy? Next point. And most importantly, as I said, are you stakeholder or shareholder base? So what do you consider a priority? Next, the next 3 points, the sub-points, sorry. Yeah. And this is where, when it comes towards implementing this, you will first normally go through that materiality engagement. How do you identify what is material to you? Would simply come back towards stakeholder engagement. So once the company has already identified who's important to them, they actually go out, ask them questions, and then from there they come up with the matrices and they come up with the strategies, and from there they identify the risk and opportunities. Next point. Once they have done that, and once they've already identified that, that is where they start picking up in terms of their performance that's being monitored and managed. Likewise, like what I was telling you, that in terms of my PhD, when I went through these several hundreds of reports, one of the things that I had to do was a content analysis first, because I could not find consistent indicators across industries and companies and countries. So everyone has its own unique story, and that is what we need to focus on. Next point. The next few sub-points, yeah. So that is where we look at it in terms of creating these overall targets. Now, likewise, in the sense that when we start picking up in terms of impacts, both from a financial, non-financial perspective, as well as the single and the double materiality, this is where we link it back towards governance. And likewise, in the sense that when you actually take a look at governance, I would also, like to mention that there is one particular definition under CIMA, Chartered Institute of Management Accountants, and they actually have a publication for enterprise governance, whereby when they look at governance, they're looking at it from two angles, compliance and performance. And that is where we keep forgetting to see that link. Next. So that will come back towards that simple mindset that if we get it right, we shouldn't have a problem in terms of being able to verify and provide certain assurance about the information that we are disclosing. Next.
Thank you, Geetha. We've just got a few minutes left to allow ourselves enough time for questions, if that's okay.
I'm almost done.
Wonderful.
Likewise, in the sense that these are some of the case studies that we've actually gone through. So this is from BP, and they provide an idea in terms of their strategies. Next slide, Joey. This is from Go Ahead, basically under the British Transport, in terms of providing a very clear idea in terms of their purpose, how do they link it to their strategy, and how do they actually want to create financial as well as non-financial value for their stakeholders. So again, you can see that they put it into a tabular format where it clearly tells you what is it that they're looking at, how are they going to achieve this, and why, the justifications behind it. Next slide. So you see that being repeated in terms of the infographics as well as the approaches. Similarly, this is for Go Ahead. Next slide. And this is just stakeholder engagement. I mean, there's several pages of it, but I just took a shot so that you can see that, because basically what they will talk about is how did they get there, what did they identify, what is going to be their priorities, and what is it that's going to take a backseat. And they actually justify that inside their reports. Next slide. Coming back towards Sanford, so you can see over here in the graph, you can see that there's a materiality matrix where they have taken into account the concerns from during the stakeholder engagement earlier and linked it towards their business impact to identify what's important for them and what's not. So as you can see at the top of the list is coming back towards sustainable seafood at the top right hand corner. Next slide. Likewise over here with BP, they've already started to come up with all their financial disclosures. So, sorry, next slide. Similar to Go Ahead, over here, they've already started talking about their climate change strategies and what they're planning to do about that. Next slide. One other area that you'll be looking at is going to be also in terms of scenario building. So if you're looking at that for the angle of how do you do that for your company, you could take a look at this from BP's annual report 2021 as well. So this scenario building helps you to build up the various ideas in terms of your risk and opportunities, and how does this link back towards your strategies in terms of your externalities. Next slide. Same thing with Sanford, where they talk about the material issues and value creation. So you can see the progress against their targets as well. Next slide. This is something which is coming back towards the various tabular formats in linking it to TCFD or GRI accordingly. And it also tells you how to actually link them back towards giving more information. Next slide. The next slide. This is just an addition to the earlier one. Over here with Go Ahead as well, you can see the clear infographic in terms of linking what they want to do, as well as the SDG. Next slide. But having said that, this is the ending part. This is where we need to look at it from a practical angle. Just because all these companies have wonderful reporting statements, it does not mean that they don't have a past or that they do not have question marks in terms of their overall reporting. So as this headline in terms of BP's end of oil vision, You can see that even if you were to Google about Shell or any of the top companies. Next slide. Go ahead. At the moment, it's actually going through its own little accounting scandals. And we actually have Deloitte being dragged in. Surprise, surprise, the Big Four has been very naughty. Moving on. And this comes back to the conclusion. Can we just put on all the points there? So to cut a whole story short, I mean, none of us are denying that it's going to be complex. But for us to ensure that this is going to work, we need to make sure that we make it genuine. And when I say genuine, we need to assess the gaps in companies. We need to be clear about what is it that we can do in terms of our data and reporting. And most importantly, we need to get the board's commitment and culture right. And if we are not going to do that, this is just going to be, as what the first few slides actually said, it's going to be another box ticking mechanism. So therefore, as we go into this journey of not just looking at it from an ESG perspective, but the larger perspective of sustainability. Can I have the last point out, Joey, please? Yeah, thank you. What we need to really remember and what we really need to embrace today is that the value creation and sustainability journey is going to be unique for every company. So when you're calculating your enterprise value, it's different. Yes, there's going to be a certain amount of convergence. Yes, there's definitely going to be certain amounts of comparability. But learn how to assess what's unique to you. It's a whole soul-searching exercise at the same time. A lot of companies also make this mistake of taking on consultants, as in they just want to have someone who's going to come in and give them, a box ticking, like, okay, follow this, follow this, follow this. Your consultant should be someone who's going to spend time with you, making sure that they are actually picking your unique story. And that's the most important bit. So unfortunately, I think we've run out of time. So I'm going to stop here and then we can go into the Q&A. Joey, am I good for time?
Amazing. Geetha, that was absolutely fascinating. Thank you so much. There are so many takeaways from what you were saying. I enjoyed it so much, and I'm sure everyone here did as well. Fabulous. So much content, and it was really great to see all the report and accounts that you showed us, because I think for us to see it as it really is, as companies try to present things is really helpful. Thank you. Wonderful. So just now progressing, let's talk about some of the things that issues that Geetha has raised. And I would just like to see if there's anybody who would like to come forward first to ask a question. Otherwise, I've got plenty to ask. Hello.
I see a hand up, Joey. There's a Parvish.
Yes.
Abdulkarim Buchiri, he's trying to talk, but he's on mute.
Oh, yes. Would you like to come off mute?
All right, sorry. Okay, can I go first? Do you mind?
Oh, please do. Yes, thank you.
First, I think let me congratulate Geetha for an excellent presentation. And this is the first time that I engage myself in a Zoom sort of conference without any problems in connections or in sound. Everything was perfect and clear. We hear you very well, Geetha. Thank you very much. Being the chairman of the Bahrain board, I'd like you to comment on the historical sort of engagement of capital market authorities in the field of sustainability reporting. What is expected from the capital market authorities, apart from the regulator like the central banks? What the bourses or the capital market authorities can do to impose these sort of things and make sure that companies follow the requirement under sustainability reporting in a better way?
Excellent question. Thank you so much for that. And that is something that I think that the one important thing that we can actually maybe I'm being a bit biased because I'm from Malaysia, but having said that, it's like what we do over here is we have a lot of sessions with these companies as well, and we also do integrated reporting sessions through the Malaysian Institute of Accountants, working together with these regulatory boards as well. Now, having said that, some of the other things that we can also be considering is how well, I mean, like say for example, you also have your ESG frameworks that they are supposed to be following. How much more can we actually expand on that? Like say for example, from the Kuwaiti point of view, they've already included, say for example, integrated reporting as part of their, reporting guidelines at the same time. Similarly, in Malaysia, it's not mandatory, but it's also something which they have put in as a recommendation within the Malaysian Corporate Governance Code as well. So what needs to happen is, it's like, yes, one side you play that regulatory role where you actually provide the guidelines and framework, but the other side it's like where you are also the friendly party and also the gatekeeper, because at the same time there needs to be proper enforcement. The problem with most countries is that enforcement wise,
Yes.
it's not that great. And that is where these companies are, like especially when we talk about greenwashing or all this misrepresentation of the statements. This is why they go like, okay, fine, when we get investigated, we'll deal with it, and then we'll deal with the penalties that come with it. There's no, so where's the accountability at the end of the day? That is
Yeah.
the major issue. So I think
Yeah.
those roles you all can take on as well.
Yes, thank you very much.
Thank you, Geetha. That was a very interesting answer, and good to know that there are systems in place like that. And Parvesh Singh, could you unmute, please? I think that you have a question.
Yes, can you hear me?
Yes, I can hear you.
Perfect, perfect. First of all, great listen. I'm starting with my journey, so I had a lot to learn. Thank you for that. So my question is, so as you have mentioned, how do you change and how do you make employees feel much more comfortable in a bigger organization? My question is, if you're starting a business, like doing a startup or starting a business, it's much more easier to implement all this into when you're starting a business. So how do you implement, and how do we make sure that it stays and the employees feel represented and they feel comfortable in the long run? The
This is
company starts growing.
sorry, can I just clarify in terms of a startup?
Instead of a startup, yes.
Yes.
Okay. Yes. In terms of a startup, it comes back towards the mindset of, again, same thing, say, who are the stakeholders involved? And, the one question that, the one perception that a lot of people tend to have is that startups or even smaller organizations or even non-profit organizations can't play a role. If you actually, again, if you go to the integrated reporting website, they actually have a database of all those organizations that have actually incorporated integrated reporting, including the sustainability perspective. And you can find that there's a lot of non-profit organizations over there and the way they actually do that. Having said that, it's like coming back towards your startup. Let me give you an example of this company in South Africa, whereby in the sense that when they used the data about their clients to get them to go through COVID-19 without any issue. And then they realized that although they were a small company, I would say, they then realized that their main customers were women within a particular age group of where they had young children and were building up homes and also facing issues in terms of financing. So they then looked at it from the angle of creating financing for these women to be able to purchase the products and being able to create more livelihoods. So likewise, it has to be dealing with real world problems. So as a startup, that's one of the focus that you need to look at. What do you want to focus on? How are you going to get? And then it flows. As I said, everybody has their own unique value creation story. We can't solve all the world problems, collectively. Probably we could eventually, but I think that's a bit ambitious. But we do what we can, and that comes back towards that mindset. So to me, would be do the stakeholder engagement, no matter how small you are, how big you are. Do the stakeholder engagement, do that materiality matrix, and you might be surprised in terms of what actually pops up from there. And then you make that decision of what you want to focus on, based on your resources, the time frames, and the people that you actually have around you.
Well, Parvesh, what's your company?
No, I'm just starting. I just recently graduated.
Okay. Fantastic.
I'm working with Nissan right now. Yeah.
Well, it's great that you're thinking about all of this at this stage. So that's
it's
brilliant.
Very interesting. Yeah. Thank you. I got a lot to learn.
Everybody makes a difference, no matter how big.
Oh my God. Thank you. Thank you so much.
Thank you so much, Parvesh. And we've had a couple of questions in the chat. So Eman Diabil, Eman, would you like to actually ask your question, or would you like me to read it out for you?
You can read it, actually.
Oh,
thank you so much.
You'd like me to read it?
Yes, please.
Okay, so Iman was asking, there are many talks about leveraging blockchain technology to improve the accuracy of sustainability reporting. Where do you think we stand on this?
I was actually laughing, Joey, about this because this is actually one of my pet subjects that, yeah. Okay, this is going to come back towards the mindset again that it's just still a platform at the end of the day. Remember, whatever that we put in, if it's going to be garbage in, it's going to be garbage out.
Yeah.
A lot of companies or a lot of people actually have this mindset that the moment that we have technology, whether it's blockchain, whether it's artificial intelligence or whatever, that it's going to solve our problems. The answer is no, because even with blockchain technology, it depends on what you actually have. Are you using a private key, public key, things like that? So especially with the private keys, there's many ways on how we can actually manipulate things. And likewise, even with public keys, at the end of the day, there's been a lot of cases in terms of hacking. And likewise, like what I mentioned earlier in terms of cybersecurity, and that companies are just not focusing on it. We need to understand that today, like how you have software as a service, you have crimeware as a service. So what needs to happen is I just go into those platforms, I pay a minimal fee to people that are not known to me, and I tell them, okay, go and do this into a particular website, or go and steal this particular information from this company, or whatever. And they can do that within seconds.
And I guess actually it could be damaging, could it not, Geetha? Because if that information is wrong and it's put into a blockchain, it's kind of giving the impression that it's verified in some way or other, when actually it's the opposite.
There's still a lot of risk, but I mean, of course, again, I'm going to say that yes, technology still does play a role. I'm not saying no completely, but what I'm just saying is it comes with its own risk as well. And that is where we need to look at it in the angle of how do we verify this? Where do we get the assurance from? So likewise, in the sense like just now I had given the example of where we use drones for audits. How do, if something goes wrong, how do we verify who's going to take the blame for it? Or even where we have AI or machine learning or deep learning, where there's supposed to be self-learning issues. Who's going to be accountable for any issues? I'm not sure whether you all remember this case many years ago when Microsoft first came up with a chatbot called Microsoft Tay. Within 24 hours, they had to take Microsoft Tay off, simply because what happened was the users manipulated the situation, and the poor chatbot became very unruly, rude, racist, and it was a disaster. So likewise, that's what I'm saying, in the sense that yes, technology is good. I'm all for technologies. I love technologies, but we also need to understand that if the information, the data is not going to come out, we've got a problem.
That makes absolute sense. Thank you, Geetha. And we have a question from Balraj Tanwar. Balraj, would you like me to read the question out, or would you like to ask it?
Yeah, you can read, please.
Okay.
Thank you.
Thank you, Balraj. So Balraj was asking, what if whistleblowers don't work, or the whistleblowing process doesn't work, and staff don't come to the front, and how do you avoid victimization of the whistleblowers? What do you suggest?
And it's by the way, Geetha is a live case study. Yeah, one of the biggest company and based in Japan. And it's a live, we have seen this, as you rightly said, the whistleblower is victimized, right? So therefore, to avoid this, we have to adjust, unfortunately, unethically, whatever it is, as you rightly said so earlier in your presentation. So do you have any suggestion to avoid such situation and still continue with your ethics,
Culture change. Simple. That's the only answer. I'll be very frank with you. Okay, today when we talk about good governance and whistleblowing, and we go back to the global institutions such as the World Bank, IMF, the United Nations, say for example, every one of them have issues. If you were to just Google right now in terms of United Nations whistleblowers and look at how many of their employees themselves have been victimized up to today. So if
100% true.
Those global institutions themselves are facing that issue, then what more other countries and other companies? I mean, I can get into a lot of sensitive issues because in the sense that, like, when we deal with fraud, this is what we see. People don't come forward because they worry about their jobs. They worry about their livelihoods. Who's going to put the food on the table for their families? And as you know, in a lot of cases where it involves politically exposed persons, they also worry about their own lives. We've seen that in a lot of countries, developing, least developing, all over, it's the same. Today, we need to understand, you see, even when I spoke about the financial institution perspective, I'm from Malaysia. My ex-prime minister has made headlines across the world in terms of the one MDB fiasco, bringing in so many different countries and so many different financial institutions. Where were the central banks? Where were all these so-called institutions? And where was their disclosure requirements when these funds were being thrown around? Selective, isn't it? So you see, the thing, I would like to give a more genuine answer in terms of that, that where everybody's going to be happy that, the moment you have whistleblowing, everything is going to be solved. But I've seen enough of cases where you're booted out just because somebody didn't like what you said. And it could be for a simple reason where they start seeing that, you're 2 minutes late to work, therefore insubordination, get lost. Comes back to a culture. That's the whole problem.
That's interesting, Geetha, and you're so right. It can take just something so small to give somebody a problem when actually they're trying very hard to do the right thing. Yes, it's quite sobering to hear that it happens even in the UN. We're getting some great responses on the chat. People saying excellent session, governance is key for sustainability, like it is key for ERM, Basel, etc. Balraj saying thanks for an honest answer, and I think that is absolutely the point, isn't it, Geetha? We have to be transparent about these things and about how difficult it can be. Geetha, I have a question. You were talking early on in your presentation about people working in silos, and I was interested in whether you think there are ways to, apart from the kind of broad term of sort of leadership, but are there specific tactics that can be used to bring everybody together so that they all get it and they all understand what it is that you're trying to achieve?
That committee that I mentioned about earlier, I'll be frank with you, get everybody in terms of in terms of departments, in terms of layers and levels. An interesting point that I've actually picked up over the years is this: if you were to walk into an organization today and ask everybody in terms of their perspective of internal controls and where they think the risk is going to be, most of the time they pinpoint the employees. They forget about the board of directors, they forget about the C-suites. And whether we like it or not, these are the guys who can actually bring down a company, especially when it comes towards financial statement misrepresentation, or even in terms of sustainability, where we are looking at greenwashing and, the complexity of data and the connectivity of data as we go along. So likewise, as I'm saying, it's like within a short period of time, we're putting a lot of pressure on them in terms of reporting requirements. We need to be very clear, because otherwise in the next, the moment that we're hitting the climate, I would say, deadlines, we're not only going to see a worse world in terms of climate is stuff, but the disclosures are going to be haywire, and we're going to be facing economic issues because half of these companies are probably going to be accused of greenwashing or facing some sort of regulatory proceedings. So we need to be clear about that, in terms of how are we going to be handling this? Who's going to be providing that assurance? We waited way too long. I agree on that part of it, but it is what it is. We need to do what it's going to be, and this is where I think we need to come back to the point of being very clear between what's black, what's white, what's right, what's wrong, and dealing with it. It's no more about doing the icing on the cake and pretending that everything still looks good. It's just not going to work.
Excellent. Thank you, Geetha. We've had a question from Muhammad Al-Ali. A question for you. Measuring sustainability, in my view, is hard to regulate because of the challenge of no universally shared definitions to encompass many aspects of our society and our economy, plus the challenge to analysis and accurately gather data, etc. Is there a direction to standardize these aspects to help an organization make the most out of sustainability reporting and monitoring?
Thank you. That's an excellent question. Okay. Yeah. Well, again, it really depends. You could follow the guidelines that's provided, like by TCFD or even the GRI, or you could come up with your own, or you could also look at those that are within your industry itself. You need to spend a lot of time actually going through what others are also doing at the same time, and likewise What is it that you're going to be able to pick up? Now, coming back towards the point of, where you talk about the standardizations, there is a possibility of being able to pick it up, but I'm not sure whether that is the approach you want to take. Now, forgive me I'm going to be saying something which is going to be a bit provocative, but I think it's something that's to be explored, because what we're going to be seeing, or rather what we are already seeing, is that companies are merging internationally, and you have, parent companies from the US or the UK or even from the Middle East expanding internationally. So these are things that we need to actually pick up, because when we talk about sustainability measures, climate scope 1, scope 2, generally those are easier to handle. But when it comes towards other aspects of sustainability, it becomes a major issue. I'm going to talk about Japan and culture very quickly in terms of where their focus area is. So Japan, one of the major issues that they face over the years is the lack of women on their boards as well as their management. Now, having said that, that is something that they do focus in terms of sustainability. But if you actually go through most of their reports, they actually have a greater emphasis in terms of providing opportunities for the LGBTQ rather than for women. Again, I've got nothing against that perspective. I'm not criticizing it or anything like that. I'm just stating it as it is. The point is, we're going to be dealing with cultures, and we're going to be dealing with companies across the board that is going to make us question a lot of things. Similarly, in the sense that when you're opening, say for example, if you're going to open up another mine in South Africa, where you might not have the necessary data in terms of your carbon emissions, that's going to be a major issue as well. How do you push that forward if they don't have the technology? How fast can you get there? So again, it comes back towards your reporting boundaries, the availability of data, break it up into phases, and be very realistic about it. That is my best advice to you, because if you're unable to provide the connectivity and the comparisons over the year, that reduces the the quality of your report and how much people would actually want to rely on your information. But again, as I said, if you do want to see something which is more standardized, you can go back to do the GRI, the TCFD, CDPs, all the different frameworks depending on what you're focusing on, and also compare that to other companies within your region, as well as those within the industry internationally, to look for best practices. That's my best advice.
Thank you, Geetha. And yeah, that's great. That's a great answer. And I think that was really exemplified in the screenshots that you were showing of the good report and accounts, where the people publishing them were not afraid of the negatives, because that gave them the transparency that they wanted to demonstrate. So there were some results which showed downward arrows compared to previous years, but without showing something consistently, there's no way of really demonstrating what's going on. So I thought that was great that you showed that. And I know that there were also some newspaper headlines about some of the companies at the end. So again, that's kind of pulling it all out into the open, although perhaps they wouldn't have published those as well. So yeah, fascinating. Thank you. And a question that I had for you actually, which was about the convergence of the regulations and the guidelines, and would it be wiser for companies to wait until a more sort of standard version appears? It's when I started working on sort of ESG concepts quite a while ago for a client in Abu Dhabi, and at that stage we were creating something from nothing really. It was very, very early, and we were talking about convergence then. Do you think now we're getting to the stage where we kind of all know, based on those documents that you shared, that that's what we should be doing?
To be honest, I would say get on the bandwagon as soon as possible. Do not wait for the convergence. I mean, you're still going to come back towards the same thing, the 4 concepts that we spoke about just now. And to be honest, it's like it's going to help the decision making for the boards as well as for the management if you have that information. So why wait? And again, as I said, it's like if it's genuine, then you don't need the convergence, to be honest. It just comes back towards the compliance mindset. Of course, I agreed on that part of it. But if you have the required data, you should be able to use the same data across the board, the same information to comply with all your requirements. Having said that, sorry, I just have one other thing to add on, actually 2 other things to add on in terms of the questions earlier. Like how today when we talk about reporting, You have your annual report, you have the audited financial statements, you've got the sustainability report, and then you all got the sub reports. You know what's the saddest part? When you actually go through those reports, there is no consistency. I have seen companies that where in each of the different reports, they've literally even given me a different employee number. So if you don't have
Wow.
consistency, how do I then rely on your financial statements? I can't. And sorry, the other thing that I just wanted to bring up was one of these cases in Germany called for Wirecard. Not sure whether you all heard about it. And that was basically coming back towards, when we're looking at financial technologies, where, cash went out of the window as well. And the irony of the whole thing was, even though that they had been investigated, the management of the boards refused to acknowledge that the fraud had actually taken place, and they had no minutes of meetings with their boards at the end of the day, supposedly, and they withheld a lot of information. There was no contracts, and this is a fintech company. So this is where I'm saying that, when you're talking about developed countries, we're talking about technology, let's all take it with a pinch of salt at the same time. We need to go back to the drawing board, and you need to take a look at where the loopholes and gaps are. Companies do not want to touch that until something happens, until a crisis hits, and then of course everybody starts crying.
Yes, absolutely. I can just imagine. Ali Al Tareef, I think you have a question. Would you like to unmute?
Yes, thank you, Zoe. First of all, I would like to thank Geetha for accepting our invitation to speak in our family virtual Majlis. It was an interesting presentation. Also, I would like to thank Zoe for the fantastic management and everybody for joining us for these fantastic questions. I have actually a statement followed by a question. So the statement is, in 2018, I believe, or 19, I have requested most of the locally listed companies to have women representation in the boards, okay? And they took my request lightly. However, the institutions who were investing in these companies, they took it seriously without me knowing them or them knowing me. They just read the minutes, and then they have appointed women in the board. Or when election came up, the communities, they were voting for women, and women reached to the board. And then these managements started to appoint women in their subsidiaries because it's easier to just appoint, okay? And then they were bragging about these number of women coming up. Today, we see that this is coming from the top now. Now this is coming from the Ministry of Industry and Commerce. It's coming from Central Bank of Bahrain, and also recently from Bahrain boards. They're saying that, they have sent documents to the listed companies that we want to see women representation in the board. Okay, so this is something so we worked on long time ago, and now it is coming. So that's something good, collective effort. Now, this is a statement. My question, I've seen these listed companies in Bahrain, I'm talking now, they have created a position called Chief Sustainability Officer. So who is this Chief Sustainability Officer? Sometimes it's HR, sometimes it's the financial controller, sometimes it's the PR, sometimes it is the chief. So actually, some companies are contacting me. They're telling me that, Ali, who should take it? Me or my colleague, financial control or risk? So we want a clear cut. This job, this is a new job. Who should handle it? Who is the best person to handle it? Leave the person. I want the position. Should be where. Thank you.
That's a wonderful question. I'll be frank with you. It really depends. To me, it's like I would first look at the industry and the technicalities that's going to be involved in terms of the sustainability. That is the major thing that I would look at. Apart from that, because you see, when we look at sustainability today, it comes from so many different angles. It could be something from the environment, it could be something from social, it could be something from, looking at the technology or products, or using blockchain or fintech at the end of the day to pick up. So the technical mindset that you need behind it is going to be relevant. And that is something that we need to look at. But you see, for those companies that are just looking at it from an angle of that we want to put it, and what companies are doing, and I would say that this could be a mistake, is that, like what you mentioned just now in terms of HR. Yeah, so when HR comes in, the only thing that they want to look at is going to be diversity and inclusion. So when they're looking at diversity and inclusion, the question would come back towards, are you just coming up with a mix, a human capital mix that's just going to be fulfilling your needs? Are you truly embedding it within the company? To me, would be when we have a CSO, it has to be someone who can truly push that value creation mindset for the company. So if it's, say, for example, going back towards Bahrain loves, is focusing a lot on renewable energy as well. Can you then take a person who does not maybe have that particular background in terms of technology or in terms of the engineering perspective in being able to pick up things like, say, for example, your wind speed, the durability of the material that you're actually utilizing, how does it differ in terms of the number of blades that you might be, taking a look at? Where are they going to get those kind of matrices? So it could be, to me, I would still go down the path of looking at someone who has that technological background, but it needs to be a collective effort to make sure that their sustainability efforts are being genuinely embedded, because it's not just about the company at all. So that is where you really need to look at it from the angle of what is it that you want to achieve and how much can you actually go. Similarly, even if you take a look at banks at the moment, are we then looking at someone who has an idea in terms of sustainability finance, in terms of fintech? At the end, who do we want to look at? Are we then looking at a pure focus in terms of where we are going to be largely heading into these type of product mixes? Sustainability finance is still new, and that's another area that I would have loved to cover as well in this session. When we are actually providing sustainable finance based on all the sustainability data, if it's being misrepresented or if it's being done by someone who does not have the technological know-how, we are going to be seeing major issues in 5 years or less. We really need to understand that as a risk. Sorry, Joey.
So I was just going to say that's it's interesting that Geetha, that you've highlighted how complex that sort of decision is, and obviously educational institutions, professional education institutions are now beginning to teach courses in sustainability. And how important do you think those qualifications are to somebody in that role?
To be honest, in the sense that, like, every bit of exposure is going to be important. And I think that is great, because you see, the other thing that we also need to question, and this is part of the SDG goals, is going to be this, employability, opportunities. At the end of the day, a lot of the degrees that we see in universities are redundant. We need to go with the times, and this is going to be a new, you see, today when we look at the move of employability and with the advent of technology, you're seeing a lot of the traditional jobs disappearing, whereby we're getting into, like, say, for example, within the GCC as well, you're taking a look into areas such as the renewable energy areas or sustainability or ESG, and this is where employability and employment opportunities are going to come up. So that is where, even, like, say, for example, this is where companies will come in, because they can provide internships, they can do guest lectures, they can provide exposures, they can provide scholarships. There's so many things that can actually be done, in terms of reaching out and educating everyone. Like, say, for example, here in Malaysia, one of the things that I'll be doing just before I get back to Bahrain would come back towards setting up a couple of sessions across Malaysia, touching, ensuring youths are being exposed to not just the SDG goals, but also opportunities within this particular area. There's so much to be done. Today, unfortunately, we have a lot of people who also say that they are experts in every one of those fields. They're not wrong, but they are probably good in particular areas. So we need to also identify those things and maybe come up with collective groups to, get the best out of these opportunities.
Thank you, Geetha. It's interesting, actually, looking in the chat that people have started to mention qualities and qualifications and roles that might be suitable. And actually, it's a combination of everything, isn't it? From chief risk officer to CEO, CFO, HR, it's all in there. There's a bit of all of those things. And I would imagine perhaps it varies also depending on the industry.
Yes.
That you're in, because if you're in an industry which is very naturally sustainable, then perhaps you would have different qualifications to somebody with more of a finance background, or a company where the company is having to convert what it does into something else, where perhaps the communication or pushing through change might be more important.
And likewise, in the sense that what are they focusing on? So if you're looking at something which is more climate related, then, well, you need someone with that background. So it's very, I would say that it's not just about, someone just getting into that position. We need to relook at educating the staff, educating people, taking a look at, there's so many new certifications, as what you rightfully pointed out. So there's many things we need to look at, and certifications is one, but you also need to look at it from the angle of research and development, innovation. What is it that new companies are coming up with? Today, I'll be frank with you, companies can play a major role in pushing forward a completely different culture with the way, things are happening. In terms of innovation, in terms of smart cities, in terms of, what can be achieved, the impossible can become the possible. But it comes back towards, do we have the right people? This is where we need to reassess that part of it. Do we have the right people? Or where we have to collectively put together a committee, and then from there, eventually we choose one person to head the whole thing. Possibly something like that, where we need to look at.
Wonderful. Thank you, Geetha. And unless anyone else has a last question, I'm just looking. Please wave your hand if you do. Otherwise, I was just going to ask you, Geetha, as a final question. How do you balance the needs of making a profit, which obviously shareholders are interested in, with something bigger? That's what sustainability can be about, can't it? It's not just about pure profit. It's about other stakeholders, from people in the local environment to employees who don't want to work in a corrupt environment. There's so many different angles to this. So how do you balance all of that?
It's a tough one, I'll be frank with you, but I'll go back towards, at the end of the day, especially if you're looking at it from a company point of view, we're all profit making. And the day that we stop making those profits, well, there goes the entire business environment. Today, you're talking about carbon pricing, you're talking about so many tax incentives that's going to come back towards, again, profitability and, financial benefits that's going to come together with it. So to me, would be, how do you balance it? Simple. Let's just say with most of the standards, they're actually focusing on investors anyhow. And when we're looking at the investors, we need to break it up over the short, medium, and long term in a generic front, obviously. But the thing would be this, it's like, at the end of the day, what is it that companies want? What do investors want? It's going to come back towards resources and financing. And when you have these sustainability figures, when you're a well-known figure, automatically sustainability financing or whatever resources that's going to come to you, or the future finance products that's going to come to you, is going to be, beneficial. And that is where company growth is going to come in and things like that. That's how you're going to be looking at it. But having said that, to get to that stage, we also need to understand that there's going to be a huge capital expenditure. You need to re-look at all your systems. You need to re-look at your reports. How many companies are still going on the basis of using Excel reports that seem to disappear or are volatile or not giving me consistent information? How many companies, not even, I'll be frank with you, even like with some of the companies that we go in, one company that I went in, they forgot an important department that they had. And when I actually asked them, where does this department go? They all looked at me with a very blank look, and it was under the engineering, by the way. I just thought I'd let you know. And it was a major flow.
Yes.
And what I'm just trying to say is, it would seem that, it should be logical that these companies already have that. But we need to look at it that when we're reassessing the entire business process, you're actually making the company more lean, more agile. And having said that, you're already starting to look at your resources. Do you really need them there? Can you re-educate them? Can you put them into, or, put them in a new role or something like that? You're asking the right questions. You're going to step on a lot of toes. I'm not going to say no. But there needs to be a mind frame in terms of when all this is going to happen. And if you don't ask these questions, like as I said just now, there's a lot of sensitive questions that are going to come up. If you're not going to ask the right questions, and if you don't want the right answers, and you don't want to hear those answers as a leader, it's a futile thought, and it's just going to be another box ticking exercise.
Excellent. Geetha, thank you so much. That was so interesting. And you're so right. You've got to ask the right questions. That's what it's all about, isn't it? And I think that's where we can so often just not quite get it. So thank you very much. This has been a fascinating discussion. I'm wondering whether either Ahmed Al Tareef or Ali Al Tareef would just like to thank everybody now that this is over, or perhaps just say a few last words.
Maybe Uncle Ahmed, but he's on mute.
He's on mute.
Can you unmute? Uncle Ahmed?
Unmute. Okay, just I would like to thank everybody, ladies and gentlemen. Thank you, Ms. Geetha. Thank you very much, Ms. Zoe. Thank you very much for Mr. Abdul Karim Buchiri, the chairman of Bahrain Post. Thank you for everybody, and we hope to meet you again in virtual Majlis in the future.
Thank you.
Thank you, Mr. Ahmed.
Thank you. Thank you,
Thank
Mr.
you.
Al-Tareef.
One.
Thank you very
Thank
much.
you. Have a good evening, everybody.
Have a good
Thank you.
evening.
Bye-bye.
Thank you.
Thank you. All the best.
Thank you.
Goodbye.
Bye-bye.
Bye.